Carmel, I thought a good place to start this conversation. We think in the US about money, about central banks. If you go to Europe, central banks' money, it just kind of all works. And I think we take an enormous amount of that for granted. And yet, for most of the rest of the world, that's not really the case. You're working on solving, frankly, money, solving central banks from a technology perspective with all of the world's challenges, problems, anything we could be working on, why is that an important one to go work on at a global scale?
Well, not everyone wakes up thinking about central banking, and I did it for the former years of my life. But the idea of the role that it plays, every transaction that we engage in is because of a central banking infrastructure that every economy has. So the cash that you use, whether you walk up to someone and pay cash or the card that you swipe at the store, it is enabled because a body, an institution was set up with the mandate to structure a financial sector that provides efficient financial services that we all use today. So we might take it for granted, but it is something that requires a lot of upkeep, and there are different financial mechanisms and how those players make money along the way and how those transactions are processed. You go from domestic into cross border and you get into a very different world. So, as we grow more digital, as we order more from different markets, there are pipes that need to connect to each other, not only to process payments locally, but for us to be able to pay and buy from anywhere around the world. The infrastructure itself, people don't think of it that way, but it is central banking infrastructure.
That's an interesting perspective. I mean, we're talking basically the foundation, the plumbing of everything.
Correct. Central banking was set up to make sure that people can build and access financial services with regulated concepts and regulated services, and that protect consumers too, which is a big part of central banks as regulators.
We're gonna come up a level. Like, I want to understand what MTech is and what you're building, like the elevator pitch level. And I want to come back down and go back into what is reality, feet on the ground. In I know you announced work in Ghana and others. You have personal experience. I want to come back into that and more deeply understand. I mean, certainly growing up in the US, I don't have that first person experience. I'm really interested in better understanding. MTech. What is MTech doing? What is MTech solving?
We build modern central banking infrastructure to unlock the value of digital currency and digital regulation because we believe that that's going to enable financial inclusion by design. When you think about using technology to do that, in regulatory environments is the number one obstacle or difficulty in financial markets when it comes to innovation. So we're solving those two problems at the very base level of a financial market.
You grew up in Haiti, were there till I think 16, came to the US. Help me better understand what is reality? You talk about the different environments, what it means to have money, the base level, the importance of that fair, inclusive, actually known regulatory environment certainty. Help me understand what is life like in Haiti, in Ghana, when it comes to engaging with the central bank, whether knowing or unknowing in day to day life?
It's a great question because that's actually at the core of what led me to launch MTech. Moving to the US, one of the things that amazed me was the access to financial services. The first thing that happened to my mom when she came to the US is like her best friend told her, they're going to give you credit cards, take them. That's how you build your credit because you're going to need credit to survive in this country. That was probably one of the best financial advice that a friend can give to someone. And that was our introduction into the US financial system. Coming from Haiti, comparing that to say, when you wake up every day, you're trying to figure out if you have money to put food on the table today. And you're trying to figure out how you're going to get it if you don't have it. The second thing is you're thinking about the exchange rate because it's either someone is sending you money that you're going to try to exchange locally to spend, or you got US dollars from someone, you're trying to get a best rate local currency so you can have more buying power. And then the third thing is whether you're going to have energy or power for the day. But that's the life and that's the concept of it. So very cash based, very day to day, very what you would call not even paycheck to paycheck and really, but day to day earning. And that is a big difference compared to the financial sector that you would have here. Fast forward to today, what Africa has set a path and innovated on is to bypass those physical obstacles when it comes to leveraging mobile money infrastructure and telecommunication infrastructure. Might be dismissed because it is coming from emerging markets, but it is a transformation or a discovery or innovation and using telecommunication infrastructure to transfer money. Because at the end of the day, and that's something that we'll talk about, it's really about data that shares and creates and documents value from one owner to the other. So when you really take a step back and think about how that can be done, it becomes very interesting and opens to innovation. But that's different in the US. But that doesn't mean that the US does not have room for improvement as well, which is a conversation that now as well. And to provide and continue to achieve this efficiency in the system is something that the central banks are on the hook for.
We're talking money. You mentioned credit cards. I want to come back to mobile money in Africa and Peza and what's going on there because that's absolutely fascinating. First, what is access to credit beyond just cash? Let's assume that in Africa and Haiti, I mean, take your pick of the environment. What's access to credit if you don't have cash on hand to go do something? Can you even get access to capital to go do stuff?
I'll tell you how it's done on the ground. Just a number to give you a reference point. In Haiti, banking penetration is about 27%. That's banking. That's before you get to lending, right?
Got it.
So
Got
the
it.
lending sector from a small business perspective and from individual is very minimal when it comes to emerging markets. And part of that, you're seeing an opportunity now. A lot of fintechs are going into this space to start thinking about reimagining what credit scores could look like, credit profiles could look like that would work in those environments. I think it's such an important thing to do to understand the local infrastructure and local environment that might not have what the US has or more developed markets. But the idea is the networks come up with their own systems. If you think about a product like Isusu, or if you think about certain mechanisms that allow communities to save and pool money together, it's a very interesting and popular concept among emerging markets. And my mom has saved enough money in those community based systems to buy a house. It's really what behind the scenes sustains a lot of economies and groups around the world. But the formal sense of lending and credit is not broadly accessible. And if you were in the US, you have an appreciation for how important that is. When you think about how you finance your education, whether it's right or wrong on how much student debt we all have left, but the concept of access
Right.
accessing the funds and having certain structures that allow you to advance your standard of living is something that should be at least accessible to others as well.
When you talk about community based finance, really what you're talking about is outside of the formal financial and central bank system. That's broken. So we've gone and created something outside of that to get access to similar levels of services. Is that right?
Yeah, DeFi before DeFi. We've been
I
doing
love it.
this. We're not new to this.
I love it.
It is absolutely very ingrained in some cultures. Very ingrained. And not only emerging markets. I mean, I think there are a lot of developed markets that have that in different shapes and forms, as far as having family structures and business structures that really reinforce that. But in the concept of emerging markets, more because of the lack of access.
You talk about like mobile money is a big thing in Africa.
Yeah.
To scale the impact of M-Pesa, let's start like what is M-Pesa? What does it mean from a day to day basis?
A telecommunication company, a telephone company like Safaricom was helping people get mobile phones and get mobile minutes. And at the time you would top up and buy airtime to talk. And some employees who worked in Nairobi had to travel long hours to go back to see their families outside of the city to bring money back home. And that was causing a lot of productivity issues. And therefore, Safaricom had agents outside of the city and came up with the concept of how about we give you minutes and we convert your minutes back into cash. We allow the agents locally to disperse with the local cash that they have to a family member. So they came up with a network definition of mobile wallet concept to allow people to convert their airtime into money and that money being accessible throughout their network. So every agent for Safaricom, a bank for Safaricom essentially, and having users from wherever they were being able to walk up to a little booth and get money out. So that was the basic, very raw version of the innovation that came to life. And as of I think last year, Safaricom had about 76% market share, I believe, of Kenya. And if you ever go to Kenya, you see why. It is just a feature phone innovation, by the way. Feature phone. This is not an iPhone and app solution we're talking about here. This is pound hash the numbers and the codes for you to actually execute transactions. And it works. In every restaurant that you go to, either it's a restaurant, a very high-end restaurant, or a mom and pop selling food by the side of the road, they all have their M-Pesa wallet number. As long as you have your wallet, you literally walk by, you type it in, you get what you need, you negotiate the price, and you're on your way. Imagine that. You can't even do that in Whole Foods. I can't do that in Whole Foods. And that. I mean, and I'm creating the contrast for you, right? You live in New York City, I live in New York City. Just those two worlds and how you compare them, you would say, well, of course, this merchant on the street in Kenya could not have a faster payment system, a swipe and go system that we don't even have in Harlem here on the Upper West Side and Whole Foods. That's the reality.
This is absolutely awesome innovation, but this is all happening basically because of central bank failure. Failure might be too strong a word here, but we don't have a well-developed financial system that allows easy money movement through regulated institutions. We don't have the ability to say deposit here, move there. We don't have your money transmitters, the Venmos of the world that allow you to move. So we've got people building similar services because it's very much needed, but outside of the traditional financial system.
Well, I think we have to be careful because, the conversation around DeFi today, I think in Bitcoin was born out of a frustration of central banking doing too much. Those are very difficult decisions. I'll tell you that, but they have a job to do. And I think when you look at the two-tiered system that is now in place, that have been in place for a while, having a sense of where the line of demarcation is, I think it's very important. There's a concern on the retail side that central banks want to do CBDC to get information on people. No central bank I've talked to would tell you that they want to go track people. There's a reputational risk. There is a cyber risk. There is an information risk. There's a reputational risk that they can't take on and that they would by having access to private information. What they have traditionally done is ask the private sector, the second tier layer, to figure it out. And one of the problems that we see in that you figure it out is that over time, there are still gaps that are left. And the innovation part of it and the motivation to be competitive goes out the window a bit if you don't continue to create an environment for competition. So that's why you've seen the fintechs enter the market to fill the gap of what consumers want and are not getting from the traditional sources. I think that's really the way to look at it. And that central banks, to say that they failed because an M-Pesa was created would have mean that, at least in my mind, that you would expect them to create a mobile app for a user. I don't think we would want them to do that. We would want them to put a regulatory framework in place to make sure that more than just M-Pesa, the environment is competitive, but providing those services with private sectors.
So what is that engagement like today? What's your engagement with the central bank? What is that relationship? The mechanics of how do you exchange information? 101 of how you build and engage.
When I started EMTECH, I was coming from the perspective that central banks have an opportunity to change, an opportunity to do something different because of what Central Bank of Bahamas was doing. I've seen it up close in being able to get a sense of what is important to a central bank in order for them to understand the value that the technology can bring. I was coming from a technology perspective to say, look, this is a new world. There are major risks, but there are major opportunities on creating fintech that are going to go out and onboard people who are not well savvy into a super smartphone. There are solutions that can provide insurance for people who live in Haiti that go through a hurricane every single year and for some reason does not have an insurance policy. But you need the last mile to be closer to the consumer. The central banks don't do that. That's not their mandate to do that, but they can create the regulatory environment for that to happen. And the big conversation is that you can use technology to do what you say that you want to do in the first place, which is maintain financial stability, making sure that financial inclusion is at its highest, is that anybody who wants access, that they can get access to a digital finance and a financial inclusion is priority. But also the concept of cross-border payment infrastructure that is a pain for everybody. Everybody hates it and everybody wants to do something about it. But one thing that you realize in Africa, for example, the fact that you have such a big continent, there are companies like, Flutterwave or Chipper Cash and those major Pan-Africa cross-border payment solutions. It's not the technology is not there, is the regulatory framework doesn't allow for a corridor to open. It's not a technology problem, it's really a regulation problem. And who holds the key to that regulation in every market is the central bank or the SEC in those markets. That's where we saw an opportunity to have a conversation to say, you want financial inclusion, you want better cross-border payment, and you as a regulator, here are the tools that I think will be a way to the future and a good add to your toolkit on how you can enable regulatory environments that work for everyone. So with data, with API, with scalability, but connecting with fintechs, with the ecosystem, with the banks, and leveraging that to look to the future.
A central bank that wants to attempt this, but doesn't have modern technology, what can they do? How can they attempt this today? Or rather, how are they trying to go about it and perhaps not succeeding in the ways they'd like to?
Well, they can definitely call us for a demo. We'll be happy to do that. mtech.com.
Is this just emails? Is this just emails and PDFs and a bunch of like
Absolutely
occasional
not.
whiteboards with
It
lawyers
is
around?
absolutely that. The whole concept of consuming services, there are services that central banks provide today and that financial institutions, banks, and now more and more fintechs are connecting to central banks and regulators to consume, whether it's regulatory compliance, whether it's licensing requests, licensing reviews, access to Fed account or reserve wallets at the central bank. Those concepts are all via email and paper based and PDF and Excel spreadsheets. Regulatory compliance is being done via Excel spreadsheets. So that's for one central bank. So imagine you're doing that for 10 countries that you're in. They each have their own individual regulatory requirements, different languages, different currencies, different this, and you're managing that. It's Google Docs, right? This is Google Docs that's doing this. And that's the opportunity. We kind of stepped into it and realized how much of a mess it was also for the financial service providers. And being able to solve that, that's the sweet spot.
I want to keep going deeper and deeper on what MTech does and the challenger. I want to come to regulatory sandboxes as well in a sec because it's a word that gets thrown around that I'm not own up to. I don't even think I fully understand.
Yeah.
What are the economics of engaging with central banks? Because there's only what 100, 150 globally. In theory, yeah, you could charge each one a lot, but that's probably that seems like a challenging way to go build a
Just
business.
printed. So we spend a lot of time thinking about what are the pain points in engaging with the central bank? What are the pain points for the central banks as far as given their mandates, right? So you already have an anchor and talking to them is the fact that they're still in Web 1 and then Web 3 is happening outside. And they're trying to figure out and they need the right glasses to read it because Web 3 is different. And that's what we're building. Those are the capabilities that we're building for central banks because something that we made a bet on is that central banking will still exist even in Web3. The concept of DeFi, yes, started from wanting to move away from that, but people still want protection when it comes to their money. No one wants an unregulated market because we now realize what that means is that there's a fine line somewhere that says that, your deposit into this thing was actually not insured by the FDIC. We won't mention names, Jared, We won't mention names, but the idea is, you need a regulatory environment that protects consumers. And that itself is what we're thinking about: APIs, the microservices, the capabilities around software as a service. It's never been done before at the central banking level, but the same benefits that the commercial banks and the fintechs are deriving from SaaS, software as a service model, that's what makes them nimble. That's what makes them scale. And we think there's a lot of value in bringing that to the central banking level, given how fundamental and structural it is actually to enable broad usage for the second tier system.
Let's go a level deeper. If I'm a central bank, I know you've publicly announced a central bank of Ghana. I know there are others in the works that you're engaging with that we can't talk about. I'm looking forward to the announcements.
Yeah.
What is the nature, like a central bank with MTech, powered by MTech? How are they now able to engage the financial services companies that they regulate or new ones that are coming in?
The problem that we set out to solve was a regulator that said, I woke up one day and 200 million in Bitcoin left the country. We can't afford that for our economy. We're going to crash if that happens, and we have no idea how it happened. Can you help us get eyes on what is happening in the market? A central bank or a regulator, if they don't have a regulatory framework in place for a particular service, the only answer that they have is a no to an innovator. However, what we saw in Africa is that the solutions are going to market anyway, and they're becoming a potential wild, wild west while consumers are losing money and there's no regulatory oversight over them. So there was a dynamic where you can't stop innovation, but you also need to regulate it. What we saw across Africa and many central banks is that they introduced a policy, a regulatory sandbox policy, just like the CFTC did, the CFPB did as well. MAS in Singapore introduced theirs, FCA in UK introduced theirs. And you saw that kind of like making its way through central banks over the past 5 years. But those are policies that are in a PDF format on a website. And the concept of really working with a central bank when it comes to innovation, it was not effective for the financial service provider. It was a policy. They had to send an email to apply for the sandbox. And the idea that they would take 6 months to come back to them and say, no, we don't have a regulatory framework for your service was really killing the innovation side.
We keep using this term regulatory framework. What is, like, in the case of what we're talking about, a fintech coming in, if they want to do a central bank digital currency, if they want to do something else, what is a regulatory framework?
So, a regulatory framework would describe a financial service type that would be offered by an intermediary or financial service provider to an end user. Given the type of service it is, it would be regulated and licensed a certain way. It would need to meet certain compliance requirement if it were to get licensed. And in order for you to get licensed, you need to have an institution, you need to have tested, you need to have a team, you need to have enough capital, you need to have the location, you need to have your deposit, all the boxes that you need to check that the regulator is going to review before they grant you a license. However, what we're seeing now is that you have innovators that are younger and not having enough capital to check all the boxes.
They need to do the work to get to the proof points that they can raise capital so that they can meet the requirement.
And the current licensing models say it's either you meet all the boxes or you don't.
That's a nice inclusive environment. If you don't already have money, you can't do the work to go get money.
Correct. Of course, it's cutting out innovation. And that's why people say, regulators kill innovation. But the central banks that do want and do understand the opportunity now, we see central banks saying, we're trying to solve financial inclusion. The banks are not particularly the most effective at doing it. You have a bunch of startups that are building great products that can go solve. You have Affirm, you have Venmo, you have this, you have those companies that are bringing solutions to market that can really solve a problem. That's the marriage that came to life to say, okay, can we create another product that would say, this is a regulatory sandbox? That means that we don't have a regulatory framework for the service, but we can grant you a sandbox clearance. You can go to market and you plug it into a set of APIs. So this is our model of a digital regulatory sandbox. You go through your process, you submit an application that is much less complicated than the full licensing. and does not have as high capital requirements and so on. But you are given some parameters for you to go to market and test. So instead of doing that via email, it's all a platform-based approach. It's a very two-way platform between the central bank, the regulator, and the regulated entity. And that's the concept of the sandbox. We don't know the rule, but we are going to let you go to market for us to understand what the service is and then inform the new rules.
Today we're a pre-EMTECH world. I'm a startup who doesn't have capital yet, but I've got a good idea and I want to try something out. And I'm just getting like 100-page PDF that says like, here's the box you got to fit in, and these are the things you can do, and this is who has to approve you, and you need a lot of money up front in order to get approved and all that kind of fun stuff. And I read that, I somehow get a hold of lawyers, and I just kind of throw it over the fence via email, and then just kind of sit there, hold fingers crossed, and pray that somebody responds to my email, which inevitably is going to come back 6 months later and just like, no, sorry, we don't know what you are, we don't understand it, go away.
Correct. I've heard 18 months with that same response, by the way.
Great. It's exactly how I want to spend my 18 months. What we're saying for the regulatory sandbox, it's like the regulator instead, again, pre-EMTECH comes back. I was like, we don't know what this thing is, but we'll give you kind of a baby version. We'll allow you to do live stuff, but maybe not at huge scale, maybe not with all of the clients with the restricted, like just a smaller version. So if you royally screw things up, it's not too damaging. But we're going to allow you to try out and basically get the proof points both the startup and the central bank need to say, hey, we want to let this thing get big, or you know what, turns out was a bad idea and we're going to shut it down.
Correct.
In the absence of MTech, that's just more PDFs and like, okay, go show me the results in Excel sheet and I don't know, email it to me once a month, and then we're going to take forever to get back to you again.
Correct.
Most of this stuff, the rules are data. What we're submitting is basically electronic forms that somebody could fill out as opposed to 90-page PDFs. All of what we should be measuring, monitoring is probably just data we can spit off and consume digitally via an API, as opposed to like throw it over the fence and blind and then come back. We can have this live continual interaction, which should allow both parties to kind of grow up together with that much shortened feedback loop. Not only can we afford to do more of these at once, but we can actually get better feedback loops going during them so we can move through them faster and get to a better place together.
That's exactly right. And we took it a step further. We built the APIs at a service type level, because then you get to say, one regulation does not need to apply to multiple service types. And then people are trying to figure out how to comply because this does not apply to them and so on. If you were a remittance provider versus a payment service provider versus an exchange provider, whether you have crypto or non-crypto, being able to have that nuanced view and that risk-based regulation and targeted regulation is something that it's implicit in what we're building, and that's unlocking a lot of value.
Where are we on this journey? Bank of Ghana was an enormous announcement.
EMTECH is now an award-winning central bank tech provider. We won that for the regulatory sandbox when we launched a pilot, our beta for Bank of Ghana, because it was a groundbreaking innovation. There's no other firm right now building what we're building, and we're pretty excited about that. But that's because we also see a genuine opportunity in modernizing and reimagining what we think of central banking and the role that it plays. We've been able to bootstrap ourselves and put our heads down to prove out this market that we could actually not only find central banks that are looking for this, but also that are just ready to take a journey further than what people would think that they would take. The journey into modernization and transformation and digitization. We raised a seed round for 3.5 last year, got more investors joining us after that, which was pretty exciting. We have a pipeline of 11 central banks. It's an amazing time for us to be smart, generate revenue, and then raise capital for us to win.
I think we need to flip that around though. It's not 11 central banks. It's like 10% of the central bank market is in the
I
pipeline.
like
already.
that. That's right. It's a journey, but it's so exciting. I think one of the highlights for me in this job are the testimonials from central banks. And in addition to that is seeing the team when you onboard, there's something magical that happens when the central bank team onboards the product and then you're watching them do a demo and clicking through and getting the application and approving that and then them loving it.
I love that. Let's go 6 months out, 12 months out. I know central banks work at central bank pace. What is success for you to say, call it 12 months, something in the short to medium term?
We have 6 countries in Africa that are live on our regulatory sandbox, regulatory platforms that are using API first model and leading the world on using open banking standards to digitize their regulatory environment. I think that'd be sick. The fintech growth that you see and that every investor is actually looking to right now, Africa is the frontier market that everyone is trying to get to. The regulatory environment is the biggest obstacle to investment going into Africa. There's a need for capital. You have great ideas, you have great startups that are looking for capital that would have a major impact.
You're working the central banks and the joy that they get from working with it. But if you flip it around, the impact that that has, just because you're working all the way down the base, you're unlocking the ability to go innovate, the ability to go build something new for everybody in those environments.
Yeah.
The leverage you have by helping the central bank get better is just enormous.
We call it the bridge internally. And we have this little M logo that we're designing, which is kind of like how innovation and regulation comes together. And it's pretty cool. And we don't compete with anyone in the ecosystem, which is the beauty of it. We're really the infrastructure provider. You won't see an MTech app.
What you're talking about is fundamentally a different model of how central banks engage with their constituents. What does that 5, 10, 20, whatever the time frame is, what does success look like on that stage? Not just for MTech, but for your clients, for the central banks and for the innovators.
Our success would essentially unlock trillions of dollars in economies around the world. And the impact that the capital can have on improving lives, giving people access to credit to get out of poverty, and modernizing the pipes and how this capital can flow in certain markets for me is my KPI, if you will, my goal, and the ease of which money can flow. And if I can send my aunt money sitting on my couch in Haiti because she got robbed, when she went to the bank and got cash out, and and now she fears going out the door to go to a Western Union and get it. That's a little use case for me in my mind that I will always keep in mind and what success is supposed to look like at the end. I'm very fortunate that there are a lot of people going into central banking right now that are aligned with that. And I like to remind them how powerful they are. You don't realize you're powerful until someone tells you you're powerful. I try to work with central banks that are aligned with that.
I love that. It's a vision the team can rally around. It's a vision your clients can rally around. It's powerful. It's enormously powerful.
Thank you. Thank you. It gets me up in the morning.
It's a great segue to the closing question as well. So we talked big future, what does it get to? But I want to bring it all the way back to present. Carmel, the same closing question for everybody. What's the biggest win that you've had? It could be personal, it could be professional, wherever you want to take it.
So I have my husband, my mom, my son, and an MTech. And the biggest win for me, I would say it's being a Black woman founder. The odds are against me and me being able to raise capital, let alone for me to walk into the space that I'm walking into and say, I have something to say and that you guys should listen. Being able to find a path forward that led us to actually go from engagement all the way through an adoption of our product into production. And you know how difficult that is from R&D, from ideation and in onboarding a major financial institution, one of the best as well with a reputation, around the world is for me something that I probably will hang on the wall. Being able to do that. That win was our own.
I love that. And Carmel, on a personal level, I'm very glad they're listening.
Thank you. More to do. I hope we get to put more on the board. We're well positioned. We know the space. We like it a lot. We have competition in the market, and that's fine. But we think we have a good game plan.
Carmel, thank you so much for coming on.
Thanks a lot. Of course, I'll do it again. Let me know. This was fun.